Manish, we were just talking about how the rate-sensitive counters are looking to you right now. What is your view on this space? Because, of course, sectors like banking, auto, realty have corrected quite heavily in the last 3-4 days of trade. Looking attractive at this point of time, or would you still avoid?
No, it does look quite attractive to me actually. Both the banking or maybe the autos or the real estate space. I mean, as I said, that there's a lot of front loading of tightening which we are seeing. Inflation is expected to moderate. Real rates in the system have turned positive. So deposit growth should follow. Liquidity tightness from 1,70,000 crores LAF borrowing, I believe, has come down to something like 70,000 crores. I mean, the liquidity tightness again is not believed to be quite structural in nature. It should be temporary. Government should resort to spending sometime in the this quarter. From a growth perspective, I think 18 to 20% for the BFSI space is a given. I think 15 to 20% growth in the auto space is a given. And in terms of real estate, I mean, valuations are pretty attractive, though the liquidity tightness is making the valuations even more attractive. So I'm really not that negative on the real estate space per se, or the interest rate sensitive space per se. And we have quite a bit of exposure in the interest rate sensitive sectors, but I really don't intend to trim any exposure anytime soon.
Manish, your call on the defensive space. I mean, counters like IT, which have managed to do decently well in the recent past, have also cracked today. Anything that you like in that space? FMCG, maybe healthcare is another sector that most people are expecting outperformance in 2011.
Yeah, looking at both the defensives or the outperformers in recent times, the IT and the pharma, I think much more positive on the pharma space, given the big opportunity that you have in terms of molecules moving into the generic space and Indian pharma companies benefiting out of the same. I mean, growth is expected to be pretty robust, and more so for the larger players. Domestic formulation business should also clock in 15 to 17% sort of a growth. As against that, if you look at the IT space, markets are already factoring something like a 25% volume growth in dollar terms. What we need to understand, and given that US growth is picking up, there is a bigger expectation of more business volume coming. So, whether this 25% volume growth could actually get translated into 30% volume growth is what the markets are betting on. I mean, valuations are clearly not that conducive as far as the frontline IT space is concerned. So, yes, it has seen a big outperformance till now, but whether they will outperform even going forward from these levels, I'm a bit circumspect. Much more positive on the pharma space than maybe the IT space in the current circumstances.
Manish, what about you? What are your expectations from the earnings season? Any specific sectors that you think might just impress all of us?
Yeah, I think as is widely expected is that the cement space and the telecom space are going to be laggards in terms of earnings. You're going to see earnings degrowth in both these sectors. As far as the BFSI space is concerned, I think 30% sort of a pre-provisioning profits figure growth is what you are going to see. But given the headwind in terms of treasury gains, which is not going to be that sharp, plus the provisioning requirement should see something like a 15 to 17%, in which the private sector would be better placed than the PSU ones. I think the surprise space could be the infra space. What I'm given to understand is that execution has picked up in the third quarter, and the sector has really got beaten down very, very heavily. So the capital goods, the infra space could be really coming out with some good numbers, which is not being expected by the street. And in any case, the street is betting on companies with near-term cash flows, rather than long-end cash flows which are available in many of these names. So I think these could be interesting prices to pick up these stocks. on a fresh basis.